You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time yet again for a little program we like to call around here the Option Block. Everyone's favorite. I hope it's yours. Certainly my bi-weekly source for all things options related. A little bit of unusual activity, a dollop of what's trading, a mix, a swirl of some strategery, of course, your listener questions, and a peer into the future around the block, all that fun stuff. We mix it all together, and we get the heady brew that is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And, of course, you can get all of our fine content, not just the radio. We also write a few things, too, over there on the website, theoptionsinsider.com. Surf on over there if you are so inclined to check it out and read all the goodness. We have breaking news from the options market. We have articles, we have education, all the UA we talk about here today, and a lot more details all up there on the website as well. A lot of cool stuff up there. If you haven't had a chance, you haven't surfed over there in a while, you've just been mainlining the radio, we still like you. But head on over to the website as well. Got a lot of good stuff there. And of course, while you're there, Insider Radio Network tab, click on that, and your journey to the radio dark side has begun. You can always find us, of course, iTunes, TuneIn, Stitcher, so on and so forth. So check us out in all those places, including via our mobile app, available for iOS, Android, and the beloved Fire OS. And joining me on the old program, I always forget to mention, too, you can always stream us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, Mixlr. You can grab the app, you can grab the link via following us on social media. If you grabbed the link in the past, maybe you missed a show here or there in terms of live, you want to tune back in, same link, never changes. So you just grab that and head on into our Mixlr page there, and you can follow, of course, stream the show live. You can send us questions, you can send Andrew obnoxious comments, all sorts of fun stuff over there on Mixlr. So make sure you check it out. If you listen on demand, we love you guys too, but if you are so inclined, if you're able, if you're around Mondays and Thursdays, 3 p.m. Central, 4 p.m. Eastern, we'd love to see you in there as well. We had a lot of great questions coming in on Monday's show, kind of overwhelming us with so many great questions, but we love that. That's why we're here doing this, and we'll see. Maybe it's going to be strategery day today, but we'll see. Maybe if we have time, we can squeeze in a few of you guys in there as well. All right, and joining me on the old program today, the usual cast of characters. Starting off, let's go in order of proximity today to the corner office of none other than Uncle Mike Tosaw from RCM Wealth Advisors, beaming in from the paradise on earth known as St. Charles, Illinois. Uncle Mike, welcome back to the Option Block program, sir.
Always good to be here. If I were any better, it would probably be illegal.
Interesting. So things are going well out there in the land of all things Tosaw. Glad to hear it. Let's also check in with our other cohort, see if he's also doing as well, or if he's just knee-deep in the umbrage yet again, using up all the bandwidth in Maine. It is the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, welcome back to the program. Glad to see that one line into Maine still holding up.
I'm monopolizing it for the next hour. That's all I'm going to say on that one. That's it.
You like the old school days when they used to have like a party line in the neighborhood, and you had to like check if the neighbor was using the phone before you could use the phone. That's kind of what it is at the internet in Maine. So I'm glad you could schedule it every week at this time. Glad of you to accommodate us, sir. All right. with the gang all assembled, let's get rolling. It's time to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the name implies, this is the portion of the show where we break down what was moving, what was shaking, what was rocking, what was rolling in today's market activity. I use those terms a little bit loosely today. Not a heck of a lot really lighting up the old tape today in terms of overall movement. We had about a roughly 5-handle range out there in the S&P, so it wasn't one of the most tumultuous of recent days. Most of the major indices closing unched or slightly up, maybe slightly down. Qs, S&P, Dow, all pretty much unched on the day. About a 3-handle net move in the S&P. So nothing really to write home about. VIX back below that all-important 12-handle. It had flirted higher. It actually got into the realm, I believe, of the 13 range. Yes, 13.71 as of yesterday, and having given back pretty much all of that and then some. 2 handles lower right now, right around 11.5 or so out there. So there was some vol, then it came back off again. A lot of intriguing stuff. I'm guessing Mr. Rock Lobster, that perhaps drew your attention. So we'll start there perhaps with your rundown of what caught your eye in today's activity, sir.
Well, pre-Yellen yesterday, or pre-FOMC, we saw 1375 VIX, 1360, something like that. So we have had a full 2-point kerplop in the VIX. So could have traded it a little better, although our fund did okay. But the basically there was a little worry that there was going to be some kind of strangeness out of the FOMC meeting. We got a little bit of volatility warranted, you know. They took it up to 13.5% and promptly crushed it today. Closed on the low of the day, and barring some incident, this kind of feels like where we're going to be. The strength in oil probably didn't hurt. I think also good earnings from Wal-Mart, which doesn't hurt. I like that stock. It seems to be on the comeback trail after getting smacked for, I guess, trying to spend money on some employees, and now all of a sudden maybe that's paying off. Surprise. But you've had the strength in places that have been kind of smashed around. I know Tosaw likes the XLE. Probably a good day for XLE today. Oil, maybe, I don't know if it's dollar weakness, but at least the stuff that makes the oil, it pulls it out of the ground, having an okay day today. So that is kind of propping things up. A technology, I mean, it's run so far so fast with NASDAQ posting all-time highs that, you know, you need a reason to kind of keep going. But I don't know if we closed at a record. I think the record's, 219.70 or something like that. I know Tosaw will know, but I know we're close, and everybody wants that 220 number. So we'll see if it materializes. But as far as a recipe for VIX goes, you know, 30 cents a day in the SPY is a recipe, or 45 cents a day is a recipe for, you know, that's 5% vol, and 5% vol is an 11 VIX. And that's what the market is giving us as of today.
So you're saying vol traders, they can do basic math, is what you're saying?
I'm saying the vol traders are aware of basic arithmetic. Not that they're great at it.
Yes, some days I may question that ability. But today, I mean, pre and post Brexit, certainly, perhaps. But today seems like they have a handle on at least the 3rd to 4th grade level mathematics. You mentioned Wal-Mart. Of course, Wal-Mart given the street a little bit of a lift, whatever lift was out there, though not much. You're right, too. It was kind of in the wake of all of this campaign they've been making. Of course, Walmart takes it on the chin all the time as being not too friendly, shall we say, to their workforce. Big commercials. I saw one just the other day with the CEO about how much money they're spending on improving conditions for their workers. And all of that perhaps resonating with the public, or maybe something else, or whatever it is. All things combining for stronger than expected same-store sales growth over there. More people coming into the store at the end of the day, and that's what they need. So a lot of other retail retailers kind of having a hard time. Walmart, kind of a bellwether out there for the economy, along with McDonald's and a few others. Not so much, doing well. Closing today up nearly 2% to up about $1.33. At about 74 and a quarter. That closed yesterday at about 73. They were pricing in about a nearly $3 straddle. I think it was around 275. That worked out to nearly 4%, about 3.8% they were pricing in. I don't have all the after-hour news, but it looks like net overall, they obviously underperformed that a wee bit, shall we say, only moving about nearly 2 as opposed to the nearly 4 that was expected out there. Uncle Mike, anything catching your eye out there in terms of Walmart and as well as the aforementioned XLE? I know one of your favorites, always blasting out those 30 puts out there like clockwork, day in, day out over there. What caught your eye in today's activity, sir?
And I'd love to sell some 30 puts if I could. No, I think oil's the main story of the day right now. Oil's up around 20% over the course of the last couple of weeks. I believe that the low was in the 39s on August 3rd. We're knocking on the door of 50 right now. 15 days, so one more than 2 weeks. So oil's the big mover at this stage. XLE's obviously had a big run as well for that reason. And with the S&P, our high is 2193, so we're still going to have, it's going to be challenging to hit the 2200 mark by the end of the week, but we could do it tomorrow. We need a 13-point gain in the market tomorrow to hit the 2200 mark, so it is doable. So overall, oil is what's propping up this market, or what appears to be propping up this market for the most part. That's the hot sector at this stage. In terms of individual names, really a lot of boredom is out there at this stage, with the exception of the slippery ride with which oil is giving us. Once again, bonds are holding still steady at the levels with which they are at. So all in all, we're in the dog days of summer, not getting a ton of movement, and what we're doing right now is just trying to find our opportunities to get prepared for the fall, wherever it may take us.
These are the days, when a show proves its mettle. Anyone can have an exciting, fun show the day after the Brexit announcement, when the Earth's falling apart and Vol's up 20 handles and everything's going crazy. That's easy to make a fun show. It's a day like today, in the doldrums of the summertime, when no one's out there playing. That's when the true shows prove their mettle, and we've been doing this for a while, so we have this down to a science. There are some things rocking and rolling out there, though. We have to look no farther than our old friend VRX raising its ugly head yet again. It is kind of crazy. Whenever we do or say anything about VRX, it's kind of become the new Apple in many ways. I'm not sure if the overwhelming sentiment is as uniformly bullish as it used to be on Apple, but people are certainly interested in this one. You mentioned VRX, and things just go off to the races. VRX moving again today, off about 3%, closing right around 29.15 or so. Still well higher than it was about a week or so ago when we were talking about it. Again, it was going into that earnings, as you recall, I believe around the 22 level or so, and then rallied up to about 28, only to give up most of that again, and now has rallied back since then. But they reached a deal today with their loan holders to amend some of that debt as they're trying to just dig out of shall we say, a lot of issues over there in the land of VRX. Of course, like I said, this thing's up and up hard. It's up about 35% just this past month alone. Today, it was rallying hard in the pre-market before it gave it up at the end of the day. It was up about 4.5%. It's actually printing over 30. I think today's high, 31.5 about today. So this thing was up even higher intraday before giving up most of that rally. Of course, all this is appearing like a mere speck on the windshield when you look at what it was just a year ago. Just last August, this thing was printing about 262.5. So it's off over 90% since that time. I don't know. This is you can call this a little bit of crazy cakes. I'm sure your folks out there have been pretty active in VRX, Mr. Rock Lobster in the chat. Speaking of active in VRX, our question of the week has been rocking and rolling. If you recall, we debated it on Monday's show. It's coming into the home stretch. It expires tomorrow with the end of the week, obviously. If you guys recall, we asked our listeners, VRX, it was at 26.66 on Monday. It was up 7% that day alone. I said the implied vol at the time was about 63. The historical vol, almost 100. Looking out 1 month, we asked people, would you rather buy calls, buy put, sell premium, or will you never touch VRX in a million bazillion years? Have you guys amended? As I look up the results right now, I'm gonna cheat because I'm allowed to do that. I'm the host. Have you guys amended your thoughts, and what's your take? We'll start with you, Mr. Rocklaus. Actually, before we even get to the poll, has this been lighting it up in your pit chat as well?
We did discuss this one. Some people in our room just think that the company is just not a nice company because they just buy companies and jack up the prices. So it doesn't look like they're going to be doing much price jacking anymore. They're going to keep getting hauled in front of Congress. Yeah, we did. I put on a little spread today. It's still kind of crazy, but I still think it's going to pay to own something in this. I don't think it's going back to $265 anytime soon, but it's got a lot of assets for a $30 company if they don't.
Well, what's your take here on the poll? What is your vote? You said you want to buy something, so I'm assuming in our poll that means you have to your only option is to buy calls. But is that your call here, and what do you think is winning?
I'd be the call buyer, and I'd also be I would say that's what the poll's saying.
And Mr. Uncle Mike, same question for you, sir. What do you have to say here? What's your thoughts on what do you think is winning our poll, and what is your take here on VRX? I know one of your favorite core holdings in the strategic night.
Of course. Well, yeah, that's one. I think that I'll still say that premium selling is what's winning. I think that we have a bunch of degenerate premium sellers out there, as Mark Longo would say. But I'm still of the camp to where I would stay away from it unless you wanted to just put a small amount of cash into it with some calls. So I guess since you can't choose both A and B, I'll go with, I'll say buy. If I had to play it, I would say buy calls. But what I'm really doing is staying away from it.
Interesting. We have a listener chiming in. This is via the chat. Again, you guys too. Over there, Mixlr.com, if you are so inclined. If you have a Mixlr account, you can chime in live by the chat. It's free. Takes 2 seconds to set it up. If you're not so inclined, I know a lot of you like to stream and then also chime in via social media. You can do that too. We'll usually find it in time for the program. RealRK saying he votes on buying calls out there in VRX. He says the bonds are implying a $70 to $80 share price. That kind of gets back to what you were saying, Mr. Rock Lobster, about the assets are a little rich for the current valuation levels. If we see what our net audience is chiming in on, they are, let's see, but you asked them again, out 1 month, what would they rather do? The winner so far, it's kind of neck and neck, 35% siding with you, Mr. Rock Lobster, and with our friend here in the chat room, buying calls. Only about 32%, really close second, is they won't touch VRX with a 10-foot pole. Can't say I blame them. This thing has been rocking and rolling of late, and as we see looking back just a year, this thing's just about a tenth of what it was. Kind of hard to argue against that approach. 22% coming into the dark side saying all this juice, I want to sell it. They want to sell some premium out there, and a mere 11% saying they want to buy some puts. Hard not to argue with that, given the fact that this thing is at the low trough of its range. But still, a lot of interesting stuff out there. I don't think we've said the last about VRX. This thing just continues rolling, continues to generate headlines. It's kind of like a headline machine. It's vying with Tesla for the who can generate the most PR-oriented headlines out there in the world of trading these days. So I think we'll be debating that. If you guys have thoughts on VRX, hit us up. Meanwhile, it's time for us to keep on rolling to one of my own personal favorite segments. Yes, it's time for us to put on our fedoras and our trench coats because we're going to head on into the dark side of the options world. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. Like I said there, this is, of course, the portion of the show where we boldly go where none other have gone before, at least not recently. And we're going to kick things off. A lot of you guys like to ask us about, what's cooking, with some of the names we talk about here on the old program. So we're going to do this just that, looking back in the rearview mirror a little bit while the Rock Lobster gets geared up for some more UA here. We're going to look back, actually, all the way back to the beginning of the year. This one is JA Solar Holdings, ticker symbol JASO, JASO. We talked about this all the way back in January 28th of this year. At the time, we were telling you that there were a lot of what were at the time long-term, longer term at least. They were March call buyers, so they're a couple months away. People they were gobbling up. It was pretty decent size for this name. This name only averaged about 250 contracts a day. We saw over 500 going up in this one trade, so 2x the ADV in this one trade. People were gobbling up the March 9 calls for about 45 cents. I think we also saw the June 9s going up, paper buying those as well. It seemed like just a straight up call buying frenzy across the 9 handle, mostly, at least a frenzy in quotes for this name. We saw this one kind of flirting in about a couple of months later. So right about the time those March calls were about to expire, we saw JASO just flirting a little bit past that 9 handle level out there. So there was a brief actually hit on March 4th. So kind of well timed. It got all the way up to 930 out there. So there, of course, you're talking about 2 months worth, a month and a half worth of decay on those options as well. So that 45 cents had eroded quite a bit. So when we went back and looked, looks like they ended up having a few opportunities to scratch those calls, maybe make a little bit of nickel or a dime, but it was by no means a profit bonanza on those, and then they kind of went out. The stock hasn't really looked back since then. Closing today, $7.83. By the end of March, it was still printing right around expiration. I think it went out right at or almost pinned at $9.01, and then since then hasn't really looked back. It got as low as about 6.25 back in June, and today printing $7.83. Mr. Rock Lobster, before we dive into today's activity, anything in your memory banks about our old friend JASO?
You know, it's a solar stock, and it's like feast or famine with those things, unless of course you're Elon Musk, and then you just buy your solar stock company.
You buy your cousin's solar stock company or something like that, right?
You fold it into your larger company, and you tell everybody to give you subsidies, or you just are not an environmentally sound person. That guy is like that. So I guess all the other solar companies have to figure out a way to make it on their own. So yes, I think the solar companies are always interesting. They're kind of like Brazil. It's sort of like, there's all this potential, and never quite goes anywhere. Except I just defended all the people that are running the Olympic Games. But hey, what the heck? They're there, and they're not.
Once they're busy fending off Zika, they'll come for you in Maine, sir. So,
exactly.
So be prepared for the wave of Brazilians coming at you en masse. So let's move on to what's catching our eye actually in today's activity, not just in the rearview mirror. We look at today and ahead as well. And surprise, surprise, our attention is drawn yet again to the dark stuff, the Texas tea, this time via a different product. This is the iPath S&P GSCI Crude Oil Total Return Index ETN. Say that 5 times fast. Ticker symbol oil. Appropriately enough, I like the ticker. Closing $6.08, up about 3.5% or so today. This is a name that does, looks like about 1,800 contracts a day. Looks like doing a fair bit more than that today, doing about 23,000, nearly 500 out there. Of that, 6.5 to 1 puts over calls. Listeners, that should tell you where our attention was drawn out here. And usually when we're talking puts, maybe we talk about some near-term buyers to hedge against a long stock position, maybe some near-term writers to harvest some yield. No, we got neither of those. We got long-term puts blasters, shall we say, all the way out to Jan of 2017. That's where our attention was. And just kind of pick your relevant put strike out there. Dollar in the money, at the money, dollar out of the money. They were lighting them up today. Started off with the Jan 2017 6 puts, so the at the money strike. Paper selling about 1,100 of those for 60 cents. As the day went on, more size going up just across the board, about 7,500 total on the 6s, about 6,000 on the 5s, and 4,000 on the 7s. Those are $1 in the money puts or close to it, listeners. So interesting choices. This is a weird one. I know, Mr. Rock Lobster, this one caught your eye out there as well. You know, this is not type of paper we typically see, just blasting out any relevant put strike. This kind of reminds me of our many debates about the stupid and the efficacy or perhaps lack thereof of that approach. This kind of has a little bit of a whiff of that. What's your take here on our friends just lighting up all the puts here in all the jam puts in oil?
So you're saying this trade has the whiff of a stupid?
The whiff of it, a mere hint of a stupid.
It's stupid hinting. What's amazing about this is not very long ago, and I'm going to say, a week ago, this product was trading, what is this, oil? This product was trading $5.25. And even before that, what was it? I think the low tick was $4 not too long ago. Yes, $4.34. So I think what they're saying is they're going to sell $40 oil, they're going to sell $50 oil, and they're going to sell $30 oil. And they just decided to go blast Ola. And that's as near as I could tell. The volatility, I mean, in this product dropped a couple of points, I think, just from this put sale alone. So there was so much bullish paper overall in either like in KMI or in XOP or any of the producers, and and this is just a proxy for WTI, but they sold puts like crazy. Now there's open interest there, but they sold way more puts than the open interest. I'd be curious to see if this was some ownership that maybe they own the stuff against underlying and they're just going to ride it. But either way, when somebody sells their puts out, that generally means they're not bearish anymore, or if they're opening to sell, they're certainly not bearish. So I think they're just taking, the different prices, and I have to say they're stupiding it up, but I think it's kind of smart.
Yet again, another case for doing the stupid on this show. They're stupiding it up, but I think it's kind of smart. Longo, when are you going to jump on board?
Jump on board the stupid train and do it for some size. I don't know. When a name gaps up from 5.25 to 7 or to 6, I don't know if the 7 put is my first stop on the train of, hey, let's blast out these buck in the money puts that we're trading.
Come on,
double what they were just a day ago.
Oil, they want it.
They want it.
They get it. It's going there.
They got to have it. Wait a minute. I can sell these put things and I can get money for it, and then I get the stock. I'm like, this no brainer, done. All of the puts I can find, I will sell.
Where can I sell more?
This has a whiff of your XLE 30 puts, Uncle Mike, which is a strike it's hard to find. I'm impressed you could trade there.
That was the idea at the time.
I think maybe what I should start doing then is sell the 30s and maybe sell some 25s. Maybe I can get a penny for them in some strike.
Oh, there we go. Penny puts. I think maybe you should call up a nice flex trade. You do like 10,000. I'm sure Goldman will do them for a penny for you. 30 puts. XLE.
I bet they take that.
Go out like 2 years, 30 puts for a penny. Who doesn't want to sell that?
I don't know how you can lose.
Okay.
Easy money.
Easy money for Goldman in that scenario, perhaps. Charging you way more than a penny just for the sake of doing it. All right, crazy. Yeah, oil and stupid. Somehow I knew Uncle Mike would want to chime in on that one. Let's keep on rolling to our next victim. Let's go on to, this is Lilly, ticker symbol LLY, of course, Eli Lilly, and company closing today $79.78, just a hair under $80. They're off nearly 0.5% or so. This is the name. Does about 7,000 contracts a day, so from an odd block perspective, does fairly decent paper. Today doing 19,000. 10-to-1 puts over calls, listeners. That should tell you pretty much where we're seeing this paper, and in particular, there were 2 strikes du jour that were really lighting it up today. Looks like we saw a bit of an AUG SEP roll / put spread / call it what you will. The AUG SEP 80 put spread going up for 96 cents. Looks like they're either maybe closing out the long spread they already have, or they're rolling out there. There's a bit of a ratio on this one. There's about nearly 7,000 of the SEP 80s on open interest of 3,000 contracts. All that versus the about 4,200 of the AUG 80s, all on about 4,200 open interest as well. So it looks like they're clearly closing on the AUG side. To add a little bit of an extra wrinkle, also about 2,600 of the SEP 75 puts going up here as well. Mr. Rock Lobster, I know this one caught your eye. Looks like they maybe are rolling out into a put vertical on a ratio. What's your take on this one? A little bit of some funky paper out here, which is what we like in the ad block.
We do. It's a little. There's a little funk. Kind of a vanilla name. So they either along that put time spread and they closed it because it's kind of we're right at the strike. So it's kind of maximum profit at the strike or close to it, or they are rolling out of. They're rolling out of their August puts and into the SEP put. Kind of an aggressive put sale. I mean, Lilly, it's. I guess like all the drug companies are kind of having some, identity crises. Can we sell the 80? It just, to me, it looks like a hard put sale in Lilly. I mean, the stock is kind of right here. It's right at the 80 level. So you're going to sell the 80 puts to get long. Okay. I could maybe see that. I think it's mostly just one, there was the spread that's closed. And then the rest of the paper, the vertical, I think was actually kind of buying it. The vol is so cheap, it feels a little bit like protective activity. That's kind of what I'm going with on this one. So as much as I'm going to look at the OI tomorrow, but somebody's just selling the 80 puts there. The stock is right there. I just have a hard time believing that with the market where it is. Or we're back into, that's what the 90s were. Oh, I'm just going to sell out of the money at the money puts because they go out worthless every month, which is kind of true for like 18 months. People are deciding to do that with the SPY at 2218, 70 something instead of at 1800. So it looks like some sort of protective paper, and I think the roll was a close, but I'll just check the open interest tomorrow and see if they actually got out of those. But the vertical spread looked like a straight put spread buy. And that kind of smells protection-esque.
Bit of funk to that one. I like it. You don't see people rolling into vertical very often out there. But again, we like the odd, the funky, the weird paper. It's why we do this after all. That's why our little guy on the website has that cool hat. Because he's into all this kind of shall we say dark side type of paper. Let's keep on rolling, literally in this case, into our final name. We haven't talked about this one in a while. One of my favorite tickers out there. This is Harley-Davidson Inc. Ticker symbol HOG. Closing today always brings a smile to my face. Closing today about 53.5 out there, up off about $1 or nearly 2% on the day. This is the name that does about 7,500 contracts a day, doing a little bit more than that, almost 5x, about 3,400 contracts, 3,400, I should say, going up today, about 3.5 to 1. Puts over calls, and that once again is where our attention was drawn. A lot of dark side action today, and in particular, it was all AUG puts all the time with a dose, a taste of SEP as well. We started off noticing the AUG 52 half puts going up just about 300-400 times for 55 cents. And then we see that looks like a total on the day of about 4,000 going up on that strike. On open interest of 4,600. We also saw about 4,800 of this AUG 50 puts going up on size open interest of 14,000 contracts open there. 47 half puts, again, the whiff of a stupid, but we know it's not. About 1,700 going up there on open interest of 6,600, and about 3,000 of the worthless AUG 40 puts going up on an open interest of 8,200 contracts. Also looks like about 2,600 of the SEP 45 puts and 3,200 the SEP 47. Half puts going up, all on negligible open interest there. So perhaps opening out there in SEP, or clearly opening, I should say. But interesting stuff. Mr. Rock Lobster, this is kind of an interesting one. What's your take here? You think perhaps these were people who were writing puts and then now deciding to the recent moves in HOG, maybe perhaps it's time to take those off the table. This thing was trading a little bit higher until today's print. It was actually a weird funky day overall. I said it closed down about $1, but this thing was trading as low as looks like about the 50 handle. Yeah, 50.10 at one point. So about $3.50 lower than it was right now. So clearly, if perhaps you blasted some out intraday, then you might want to take some of those bad boys off the table. Interesting paper here, Mr. Rock Lobster. What's your take here on all this intraday put action in HOG?
Well, on this one, I believe there was some EPA, like remember with Volkswagen, they did there could be some emission issues. It's like anybody buys a Harley and they're worried about emissions. I find that kind of hard to believe. However,
not the most environmentally friendly crowd, I would think. Not Prius drivers. They're driving HOGs.
Exactly. Although they probably get pretty good gas mileage, but anyway. That being said, I think they had to do some settlement, something or other with the EPA. That was really bad news. And then actually, I think the savvy folks came in and just sold a bunch of puts while the vol was jacked. And as of right now, it looks pretty good. There was even, I think the 40 puts at one point traded 2 cents. I mean, I think that might have been short covering, but it was definitely ugly for about an hour, and then kind of like nothing happened. So I think, it seems like that was kind of the classic algo-driven paper where they read the news, didn't look as bad, and then they came in and just started smacking it like crazy. So, and it looks like all the put sellers for most of those prices that we looked at, they look like they were right. So if you're a liquidity provider and you weren't buying the crap out of the stock, you have Harley-Davidson tire tracks all over your back.
Yeah, this was an interesting one to watch today. I don't see a lot of the intraday vacillations as aggressive as this, and some deft put selling action, or put trading action, I should say, out there in the land. Speaking out there, we're getting some good questions on EWZ. Try to get to those in a few minutes, but first, let's welcome back Uncle Mike Tosaw, because it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. You may be saying, wait a minute, it's Thursday. How does that work? Well, we mixed it up. So Monday felt a little weird, but we're having fun with this kind of new flipping things around, doing the Strategy Block on Thursday, Mail Block on Monday. We still probably have some time for some of your questions. Spoiler over there as well. By the way, all you guys out there who are asking about bonds in the chat room, Uncle Mike may have you covered, because I think my minions have been kind of busy today. They've been eating their various jams and jellies as they are wont to do, but they were whispering in my ear before the show in their minionice something about collars, and not close, not like weekly collars and maybe monthly, but kind of farther out. And then maybe something to do. I couldn't make out the last part. Something to do with bonds. So I don't know, Uncle Mike. Does that kind of cover it, or did they botch it?
I think they did a good job. The minions do pretty well, Mark. Well, what are you paying them these days anyway?
Delicious rare Welch's jam. You can only get it in most grocery stores.
Ooh, wow, that's the good stuff. I might come to work for you as a minion, maybe.
The wages are quite delicious.
That they are. All right. Right now, bonds are very high at this stage. The price of bonds is very high, and then of course the risk is that if interest rates will come up higher, then you're going to have shrinking bonds, and it's just kind of a problem of what you should do with the money that you have set aside for bonds in your portfolio. Now, bonds are designed to be something of low risk. Rightfully so. Bonds are, in theory, considered less risk because of the fact that they're not subject to the volatility of the stock market. Bonds promise that you'll get paid back, and you get a little bit of income. Now, right now, there's not a lot of income out there in the bond world just because of the fact that interest rates are so low. What can I do, you may ask? Well, let me give you some ideas. I just came up with something, and this is something that I'll be looking into for a lot of my clients over the course of the next few weeks, and that is a way with which to have something relatively safe, but still have a little bit of a rate of return. Now, what provides income? Well, there's ways with which you could argue how you can get income, whether doing a covered call, the type of wheel trades that we've talked about on this show, the triple income strategy that we've talked about that RCM does. There's a lot of ways with which you can achieve income, but what if you aren't necessarily needing income? You just need something to put your money in that's a little bit more safe. Well, that's the beauty of options, folks. I want to give you an idea right now, and I am not endorsing this. This is just something I came up with rather quickly. The concept I've been doing for years, but this trade that I'm mentioning right now is just something that I came up with before the show or before I'm talking. And I want you to just kind of look at this and see how this could be something that you could do to put in your bond portfolio, perhaps. So let's look at silver. The shiny stuff, not quite as shiny as gold by any means, but the poor man's gold, silver. Right now, I'm showing silver trading at $18.77. And if silver were to go from $18.77 to $21, well, that would be a 12.4% rate of return. If it were to do it over the course of 519 days, should you annualize that, that would be the equivalent of earning 8.72% annually. Well, Mike, that's wonderful. We'd love to earn that. However, there's risk to silver. Silver could be at $2 tomorrow. Well, I can't argue with that. Well, maybe not $2. I'd probably argue with that. But silver is very volatile. Everyone that looks at silver knows that. And I'm looking at SLV, for those of you home gamers out there. But now let's add a long-term collar to this. I mentioned 519 days. Let's go out to January of 2018. And once again, I'm not recommending this trade. I just want to do this as a way to show a way that you can have some protection, kind of have your cake and eat and have some type of potential growth, but something that has some safety to it. Now, by comparison, if you were to look at a chart of IEF, that's the shorter-term bonds for the 7 to 10 year bond yields, you'll see a lot of movement in it, much greater than what I'm about to describe when we put this collar on silver. But let's say that step one, I own silver. Step two, I buy the 18 put option. That means I have full protection from 18 all the way down to 0, meaning that the most that I can lose is the 77 cents plus the cost of the put option. Now, with that, let's say I don't want to pay for that stinking put option. Well, with that, we have the ability to finance that by selling a covered call against it. We can sell the SLV 21 call on it, and what that will do, assuming you get a decent fill on it, that should about pay for the 18 put. If you work it, you should be able to get this at pretty much a no-cost collar, just in looking at the bid-ask of both of the 18 put as well as the 21 covered call. So now here's our position. We're long SLV. We own a put option at the 18 level, and our profit is limited at the 21 level because we're obligated to sell it at 21 because of the fact that we have the covered call on. Now here's what the numbers break down to. If you're not bullish on silver, this is a stupid trade, so don't do it. But I'm just pointing this out as a potential strategy for those of you that want something safer to invest in, and then you're just rightfully don't really want to put a lot of money into bonds right now. Silver, you get in at $18.77. Should it go to $18, that's the lowest it can go, or that's the most risk with which you can have on this trade. You're going to take on a risk of 4.1%. So if you're totally wrong, and silver, this volatile thing, this horrible, awful, evil thing, goes down 40, 50, 60%, which it could easily do, you're out 4.1% over the course of 519 days. that's something that's very recoverable and, quite frankly, is much less of a risk to the downside than in a bond. If you're in IEF or TLT, heck, 4.1%, that's nothing. We've had that kind of movement over the course of the last couple weeks, couple months. Now, with silver, the most you can possibly lose is 4.1%, assuming you do this trade the way with which I've described. And it's an approximate number. It might be up or down a couple basis points, plus I'm not factoring in commissions, but hopefully you get the idea of it. The potential upside of this is 12.4%, meaning that if silver goes up to $21, and it's at $21 at expiration in 519 days, then you have a 12.4% rate of return. Annualized, that comes out to 8.72% per year. So my point is on this is if you have the low bond yield blues and you don't feel comfortable investing in bonds, a longer term collar is something with which you could use as somewhat of a bond replacement. Now, does that give you income? No. But if you're looking for something safer, it's mathematically safer to invest in this than invest in a bond with no downside protection. And if you're looking for some type of a rate of return over the course of the next couple of years, well, you might be able to get an 8.72% annualized rate of return. That's a very doable, very possible thing to have happen. So for those of you that want to invest in this, it is something to consider. And that is the strategy block for today, the debut Thursday strategy block.
I like it. I like the Thursday. It kind of feels good. We let some people hanging who were expecting maybe a mail block today, Uncle Mike. So let's include them too with a real quick version of a Thursday, good old Thursday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. I love you guys writing in, but the live chatters, they're stealing all your thunder. So maybe join the Mixlers. You can get in. You can get rotated in. I don't think we have some cool questions in the that people have sent in too. We'll get to those maybe on Monday. But let's see real quick here. Uncle Mike, we got in the chat room here. This one looks like it's up your alley here. RealRK says, thank you. Speaking about bonds, there you're getting some love. He says, any better option than buying puts on HYG in anticipation of rate hikes? And since it has lagged the price of oil, not familiar, HYG is the iShares iBox High Yield Corporate Bond ETF. Closes today at about $86.85. Uncle Mike, you weren't really going on too much about HYG, but what's any thoughts here for our friend, the RealRK?
No, I mean, if you're really concerned with bond yields going higher, I'd prefer to, if you wanted to be short bonds in some way, shape, or form, I'd look to doing more puts on TLT. I think that's more in line with what interest rates are going to be. With HYG, they're the high yield bonds, or as the non-bond salesmen of our business like to call them, junk bonds. So I think that what I would look to do is to either be short futures contracts or to buy some type of put option on a government yielding bond in some way, shape, or form.
All right, we got some more here. We got, let's see, get the names right. Oh, it's actually, it's the same guy. He's getting like double love. He was asking this one earlier, so I don't mind if he's doing this one. He says he wants to know our thoughts on buying puts on EWZ Brazil. Rock Lobster and I were just kind of chatting about EWZ here in the back here, chatting about how it's one of his personal favorite names in the world. He wants to know, he says, I bought a few contracts for September in anticipation of rate hikes, overbought economy, and the obvious lack of resources for basic human needs. Did I pick the best emerging market ETF with very low implied volatility for this short-term play? Mr. Rocklofts, I believe this is not one of your favorite shorts, but I'll let you have at it. What do you have to say here for our friends who want to know about buying puts in EWZ?
Well, there's a couple of reasons why. One is EWZ has Petrobras, which used to be a huge part of EWZ, but it is still a big part of EWZ. And if oil rallies, EWZ rallies because of the way that's gone. Because that ETF is run there's some pretty dominant, also banking in there as well. So I would be careful about that. Also, Standard & Poor's downgraded Brazil to yucky status when EWZ was 19. Now it's 34. So when the S&P gives a country the kiss of death, that's usually the dead bottom, because S&P can no longer not downgrade things when they look ugly. Like, the whole financial crisis, they sort of avoided downgrading anything ever, and it got them into trouble. So now they're a little quicker to pull the trigger if they think something is wrong. And granted, Brazil was they were having some issues, 7-8 months ago. But that's when you're having issues, that's the bottom. So that was the downgrade. So is it my favorite short? No. Maybe look at put time spreads, might be a little cheaper. And I would maybe hedge with a call just in case. They're probably after, I'm going to say, the Rio games, there will be a hangover, and probably, if anything, you would probably see a little pullback then. But again, speculation. But it's not my favorite outright short fighting the price of oil. That would be the biggest. That's the biggest reason. So I would just caution on that one. Caution.
Caution. Let's see. You got time for one more here. This one comes from Vegs. I'm gonna have to see if I can interpret what he's trying to say here. He says lots of big fat options. Open interest is tied to the big ES options around the 2200 level. How does he get to see this information? I think he's asking that, or how do we see this information? Does this mean big traders are betting on 2200? Does that mean pros or retail? Well, the latter part's relatively straightforward. If they trade in the big ES options on the futures, chances are they're probably in the institutional crowd. Retail tends to aggregate around SPY, and of course the E-mini on the futures option side. Don't see a lot of big retail players really aggregating into the big contracts. In fact, a lot of the brokers I know don't even offer the big futures or the options on them. They pretty much only offer the E-mini if they have an FCM or some sort of futures options arm. So it's kind of a hard product for retail to even get access to, just because it's not really oriented to them. So if there is a big open interest out there, I would certainly say it probably is leaning towards the institutional. 2200, that doesn't surprise me at all. We talked about this before on the show about how there is this fascination with round numbers out there in any product. I don't care if it was WTI last week around the 40 handle, VIX at pick your round strike level, or S&P at 2200. All of these things have a fascination for people out there, and that level certainly is a big round level. How do you see this information? I think that's what you're asking us. So that's, of course, if you're asking us, you must see it. So the easiest way to see OI is, of course, go to your broker of choice, or if you don't get a lot of futures options analytics, actually we do a program on the network on every Friday called TWIFO, This Week in Futures Options, and we work with a great vendor there, Quick Strike, and they make a lot of that stuff available for you guys for free. So if you are interested in some free futures option analytics, the best place to go to get that actually is over there at CME, cmegroup.com/TWIO, This Week in Options. That's the landing page for that show, in terms of you get all the reports right there, and you can go pull up these contracts for yourself and see exactly how much open interest is on these strikes. But that said, we talked about this before, the open interest on certain strikes, how it's just, people give it this kind of magical gravitational power, how the index has to move there or the underlying has to pin there. And we've kind of debunked that before on this show, so we don't need to go into too much into detail. But I don't know, any thoughts? Maybe Rock Lobster, start with you on this size open interest in the big S&P options over there at the S&P on 2200.
This is what and Mark, this is Sebastian's theory, which I don't think is a bad theory. We're thinking maybe those people that have sold 2200s, and there's a lot of open interest there. They don't want to lose their stock. So it is possible. It is possible if we get near that strike, we'll see some buying to cover or maybe buying to roll, which could generate short-term some kind of long delta hedging in the market. So if people are kind of holding on to their 220s and they're waiting, and then they roll them, maybe they wait till the delta gets a little higher, then all of a sudden maybe there's, for this week, what is there? There's 30 or 40,000 contracts, and the SPX is, equivalent. Then all of a sudden if they're buying those back, that puts a huge short delta on the liquidity providers. They have to buy, so what it does is there could be a kind of a mechanical squeeze at that time if we approach the number or people want to close it. So if we start to get there, there might be some running to the exits, and the run to the exits would push us a little higher. That is the Sebastian theory, and I find it a reasonable theory for kind of squeezy action. What does he call it? Squeezy Mcheesenstein action near
I can honestly say
strike.
I've never heard that term, but it sounds like a Sebastian-esque term. Squeezy Mcheesenstein.
I can never come up
that is not an
stuff.
Andrew term in any way, shape, or form. So I will not label that upon you, sir. But speaking of running, we got to keep on running with the show. Into our final segment, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we break down what we're watching for the rest of the week into the old weekend. We kind of mentioned some of the things that were lighting it up already this week. It was a heavy week for the retailers out there with Wal-Mart and others already popping off. We saw some of those come out last week as well. So we kind of are in the tail end, the dregs, if you will, of the earnings season. If you're interested in retailers, there still are, I guess, Foot Locker counts and Stein Mart coming out tomorrow. We also got John Deere out there if you're interested in the heavy machinery side of the business. Estee Lauder if you're into the softer side of all these types of things. So there still are a few names out there of interest, but most of the calendar fairly light, which again goes back to what we were talking about at the top of the show, which is what's going to keep any of this VIX cash have any juice in it for the foreseeable future, barring some sort of apocalyptic event like August 24th of last year. Not a heck of a lot on the near-term horizon to really juice the old wheels. I don't know, I'll start with you, Uncle Mike. Anything in particular catching your eye for the rest of this week into the old weekend, aside from trying to keep your eyelids open, sir?
Well, the 2200, when that happens, I think we're going to have just a flood of Google and just everything. You're going to see the new term online of Squeezy Mcheesenstein.
Squeezy Mcheesenstein.
Aside from that, I think that's about it.
We might have a title for our episode, Squeezy Mcheesenstein. That's just Mcheesenstein. That just sticks in the brain. Pun intended. All right, Mr. Rock Lobster, take us home here. What are you watching the rest of this week, sir?
Besides the aforementioned, I won't even say it again because I don't want to ruin the effervescence of Mark's phraseology. I'm looking for 220 on the SPY either this week or next week. I'm looking for VIX to move into the low 11s. And I'm looking for oil to keep rallying. The U.S. basically has been had declining production now for 2 years? We're 2 years into this oil thingy. OPEC has not. Saudi Arabia has record production, so that means they can't produce anymore. So OPEC is kind of producing at max. So if there is a little bit of a supply squeeze, that means there's room for the U.S. to produce a little more. And the U.S. might have the last laugh, although it's been painful for a lot of the producers. So I think, a little dollar weakness, which again, strange because since the U.S. is the only country, I think, in the free world that pays actual interest on anything, even though it's small, it's still interest. Oil kind of helping the S&P 500 higher, and volatility relatively low. If you look on, in trade, Hillary Clinton, and again, not liking Hillary or disliking Hillary, but just she is the odds-on favorite at this point to win. And unless there is a miracle, that's probably what's going to happen. So all of those things, like kind of a sure thing for the president, you might like her, don't like her, but, equity markets like certainty. Oil prices slowly rising, that's a certainty. The next president, we've already figured out who it is, that's a certainty. All those things help squish volatility down. And the unintended events are actually what brings volatility back up. What that will be, I don't know. You have heard nothing about China in a year, literally nothing about China. So Did the Chinese wave their magic wand? I do not know. So problems like that, and of course, there's always negative interest rates and massive balance sheets of central bankers, but nobody seems to care about that right now, yet it still exists. So, but since all of that is all known, and the VIX is at 1143, it still looks like the trend for volatility is down and for equity prices to go higher. And whether you think the market's overvalued or not, that's what's happening. There you go.
All right, everybody. That music means we got to get out of here. We come to the end of yet another epic sojourn through the world of options. Started off talking about Wal-Mart and some VIX. Got into some weird UA out in some weird places, rolling into vertical ratios and all kinds of funky stuff. Got into some bonds, some of your questions about Brazil and all kinds of other fun stuff. And then we ended with, of all things, Squeezy Mcheesenstein. So an interesting week it's been on the option block. But before we go, we check back in one last time with my cohorts here on the old All-Star panel. Let's start with you, Mr. Rock Logic. I know you got to run. What's cooking in the land of the pit?
Cooking Land of the Pit, we're going to have a weekly webinar next week. If you go to our blog page, there's a free 1-hour webinar there that I posted from last night. If you like what Option Pit does for education, it looks a lot like the webinar I did last night. Although it will be a lot more in depth for our Saturday class on the 27th. So go to a webinar, do some learning, and stop wasting your money on dumb trades. There you go.
There you go, and pick up some good options terminology while you're at it. And Uncle Mike, what's cooking in the land of all things RCM Wealth Advisors?
Well, if you guys are looking for an advisor to help you through the Squeezy Mcheesenstein market, feel free to contact me. I'll work with people, even if you just have a couple $100 a month to invest. Give me a call, 312-212-3531, or send me an email at mtosaw@rcmfs.com.
All right, but that's going to do it for the show. On behalf of Andrew and Uncle Mike, and indeed myself, thank all of you out in the listening audience for downloading and streaming and subscribing to the program. Remember, unfortunately, no live vol views tomorrow, but we will be doing it live, just not streaming it. We're going to be doing it live in person over there at the CBOE for their Options Institute volatility class. That should be kind of fun, but unless you're enrolled in that class, I don't think you have a chance to check it out. But don't worry, you'll be able to get it on demand Monday morning as usual. And of course, stay tuned tomorrow, TWIFO, 3 p.m. Central, 4 p.m. Eastern, all things futures, options. And we'll see you tomorrow for more here on the network, and next week for more on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.